Welcome to the 3 in 10 podcast. I'm Scott Slayton, partner and chief strategist at Capital Creek Partners. In each episode, I'll give my brief perspective on 3 things we think market participants need to know this week, and we get it all done in 10 minutes or less. For additional resources and analysis, please visit our website at capitalcreek.com. Here is your starting lineup for the 3 in 10 podcast for Friday, August 8th, 2025. First up, productivity rebounds sharply in the second quarter. Number 2, CAT reports disappointing second quarter earnings on tariff headwinds, and the stock declines meaningfully on the quarter. Number 3, thoughts on the sanctity of the economic data in the wake of the BLS firing. So let's start with productivity. Productivity rebounded sharply from minus 1.8 in the first quarter to positive 2.4 in the second quarter. Not surprising given the strong rebound in GDP. We prefer to look at a 12-quarter moving average for productivity because it is surprisingly a volatile number, and that 12-quarter moving average is spot on 2%. That compares to 1.5% over the last 10 years and the last 15 years. Productivity is important for inflation, for employment, for profits, for wages, really for the standard of living. Productivity is in some ways a magic bullet. If we can get it up, it solves an enormous number of problems. And it is my strong belief that artificial intelligence is raising productivity now, and it will continue to raise it in the future. It's not really showing up in the data yet, but the trend in productivity is modestly higher over the last 2 years, and I believe that that trend is going to continue or even accelerate to the upside. Artificial intelligence productivity gains are everywhere but in the data. This is what we call Solow's paradox. And Robert Solow, a very famous economist, said back in the early 1980s that productivity due to computers was everywhere but in the data. And I think Solow's paradox is flowing through again in artificial intelligence. We know that it's happening. I hear this on company conference calls all the time. You hear it in the commentary that the companies are using artificial intelligence and getting huge productivity gains out of it, but we're really not seeing it in the data yet, and I think that will be forthcoming. So underlying productivity is highly likely to be rising, and you may not be able to see it in the data, but I think you can see it in the stock market and how well the stock market is performing. Now on to Caterpillar. Disappointing earnings. Revenues in the second quarter were flat to down, even down a little bit. Earnings were reported per share at $4.72 per share. That compares to $4.88 for the street estimates. So a pretty decent miss, a solid miss, and way below the second quarter of 2024, which came in at $5.99. So I wanted to listen to Kat because I thought it might tell us something about the industrial economy and about tariffs. And they talked extensively about tariffs coming through at the high end of the expected range. So I think they had been assuming something closer to 12%. It looks like it's going to be more in the range of 14-15%. And this is going to be a headwind to profits in the second half, according to management. Sales of construction equipment, which are really the bread and butter of Caterpillar's business, are flat year over year. There's not a lot going on there. However, power sales were very robust in the quarter, up 28% year over year on data center construction. So here it is again, AI driving investment, driving productivity. China excavator sales were up year over year, but I'm not too excited about that because it was off of a very low base. But they are beginning to see some green shoots in China construction demand. We know that Chinese overbuilt housing and commercial real estate massively. But they're building again. We've all heard about this dam, which is going to be the biggest dam in history. That's going to require a lot of excavation for years. And they're starting to rebuild infrastructure again. That's what they do. The Chinese build things, and they're going to need Caterpillar excavators and tractors to build those things. So that is encouraging news that we're seeing green shoots in China construction. CAT is expecting $450 million of tariff costs in the third quarter. That just struck me as an enormous number, $450 million in a quarter. They are now adjusting to tariffs. So they're claiming, management's claiming, okay, we sat on the sidelines, we were frozen, we didn't know what to do. Now the dust is starting to settle on tariffs, and they claim to have many levers to pull. So what are these levers? They mention them in order of importance. First of all, they're going to cut discretionary spending. Secondly, they're going to start to cut labor costs. And third, they're going to start to raise prices. And they were pretty timid about admitting that they were going to raise prices, but it was very clear if you listen carefully. I just think CAT is indicative of other multinationals who have been frozen. Now that the dust is starting to settle, I believe price increases are going to come through. Maybe they're one-time price increases, but there's still going to be price increases. They're going to come through. And I will quote the management, we will defend our margins, quote unquote. That to me is code for we're going to raise prices. So no surprise there, but I thought it was interesting. Now on to the sanctity of the data in the wake of this BLS firing last Friday. The Bureau of Labor Statistics produces crucial data for market participants. These pieces of data include the non-farm payroll report, the JOLTS report on job openings, the CPI, the PPI, export and import prices, the employment cost index, unit labor costs, productivity, which we just mentioned in this podcast, and many more. But these are some of the most important pieces of hard data that we get each month. And to me, the sanctity of the data is absolutely crucial for market participants, for the Fed and their policy, for fiscal policy makers, and for private sector companies. We all rely on these data, and they must be accurate, they must be timely, and of course they must be nonpartisan. So I have always believed that the data were clean or untainted by politics, and I still believe that. If not, we probably would have heard from insiders that there were shenanigans going on, or whistleblowers would have come forth at some point in the last 20 or 30 years to say the data were not clean. That has not happened. So if we can't trust the data, I think you can make a case that stocks in the United States should trade at lower valuations. Maybe bond yields should be higher if we can't trust the data, if they're being manipulated for political purposes. And I would say that U.S. financial markets are the envy of the world due to transparency, due to liquidity, and due to trust. Trust that the data and the numbers are accurate. Don't tamper with this golden goose. It is just too important. The BLS has had its budget cut. Headcounts have been reduced. Response rates, for some reason, since COVID have really fallen off. And nobody seems to really know why that's the case. In revisions, we saw a huge revision last August, which upset people. And we saw a big revision, of course, to the July data just last week. What does the future look like? Well, I think if we can't trust the government data, we're going to see data collection migrate to the private sector. And that might even be a good thing. The private sector does most things better than the public sector. But we're probably going to have to pay for these data if they do migrate to the private sector, and that would be a shame. So there you have it. That is your 3 in 10 podcast for Friday, August 8th, 2025 at noon Eastern Time. As we always say, do the work, endure the pain of gain, and have investment courage.